One of the strongest bounces in the market just happened after CPI. Is this a bull trap? What happened here? You guys know, because you're fans of this channel, that I was waiting for the election gap to get filled. As a matter of fact, on X, I said back in January 2nd, follow me on X and Instagram for free daily trading and finance content. Very close to filling the election gap, taking out December low. In my estimation, we should see a rally from there leading up to the inauguration. So in this video, I'm going to be giving you a market update, telling you, is this an epic bull trap? What plays did I take and what plays am I currently in? I haven't seen this many nice setups in a long time, probably since August 5th, when we had that Japanese yen carry trade scare. So let's get right into it. I'm going to give you my plays towards the end of the video. If you want, you can fast forward. All of the timestamps will be below in the chapters for your convenience because I respect your time. Let's get right into it. Now, why did I think that the election gap will get filled? Well, I didn't really know until we started declining here, creating bearish market structure. But once that happened, it was clear to me that the gap that we saw after the election was coming down to get filled after we had some sell-offs in December due to tax loss harvesting, as well as some shorts, some weakness, right? Obviously, the market was in overbought conditions, depending on different variables that we look at, whether it's forward PE ratios, whether it's valuations of individual companies. But after creating market structure, the obvious question is, where are we going to? We have this election gap here, and it's in line with the 100-day moving average, this green line. Now, in a bull market, the 100-day moving average is usually an area where you want to see a bounce from, right? Most drops are only pullbacks. They are not bear markets. You don't average that many bear markets in a year. There's only about one drop per year of 10%. And we usually get a 20% drop every 2 years or so. Most of the time, these drops are just 5 to 10% pullbacks. So it made sense from here to here is about 5% that this would be the pullback territory. And also the new administration is on the way in. The old administration is on the way out. So there was a lot of buying pressure here initially, and there is probably a lot of buy orders here. Also, keep in mind that January OPEX, the options expiration for January, is the most important options expiration for individual options. It's different than index options. Everyone thinks of December as the important expiration, but it's January for the individual options, meaning the individual stocks like Tesla, Meta, etc. So if we saw a lot of puts here, what ends up happening is the market makers, when they sell puts to people, right, they go out and short the stock. Why is that? Because they want to remain delta neutral. So when they sell a put to people that want to buy a put, right, that is a long position, and then they short the stock, which is a short position, just to get back to zero. So what happens is when those options expire, and the expiration is coming up this week, January 17th, as of the time of this recording, right, then as those options expire or get closed, then those market makers, those market dealers have to buy back the stock that they shorted. Plus, like I said, this weakness here is a temporary pullback. And then after a good PPI number and a good CPI number, we had some dollars on the sidelines waiting for this obvious support level to buy. Now, here were the positions that I had going in. I had calls on IWM, which is the Russell 2000, because if we were going to see a rebound, we tend to see a much bigger move in small caps during January. I know that only because I looked at data. And I also had Uber, which you guys know if you're fans of this channel, is one of my favorite setups, still is. But I had these Uber February 7th calls. The reason I took screenshots is because I closed them. So made $1,600 on the IWM calls, made $2,000 on the Uber calls. Now in my public account, I still have the longer dated Uber calls, the $65 calls, expiring March 21st. And when I get into the plays, this is actually one of the plays that I'm going to talk about because it's one of my favorite setups right now. But the longer dated calls are currently up 43% as well. And I sold half of my IWM position, so I have 2 of the February 21 calls remaining. And if you're looking for a broker, an alternative to Robinhood or Webull, check out Public. Public is a registered broker in New York here in the US. a lot of things that I like about Public, but they have high yield accounts, not only high yield savings, but also a bond account currently paying 6.94%. You could buy T-bills right off of the app as well. And one of my favorite things is this AI assistant where you can literally ask it any question, such as what is Uber's free cash flows? And instead of having to go dig for the information, it gives you the information right here. Uber has a reported free cash flow of 2.1 billion. This represents a significant increase of 133% compared to previous periods. Do a comparison between Uber and Lyft. Would you look at that? There you go. Uber Technologies gives you the free cash flow, the market cap, revenue, EBITDA, net income, etc., debt to equity, PE ratio, and gives you the same thing for Lyft. And thereby it makes your investing decisions a lot easier. Check out the link in the description for the link to sign up to a Public account. It is my favorite broker right now. So the question is this an epic bull trap? Well, truth be told, it can be. Now, why do I say that? Because if you look at the trend, I'm going to use the futures chart because it's more contiguous than, say, the SPY chart. But if you look at the S&P futures chart, you can see that we are still in a downtrend here. So we actually have not broken structure to the upside, even though we found a lot of support at this major demand zone, right? Which was previous resistance, then support multiple times. This is where we actually found support. So we bounced off the level we should bounce off of. And here's the 100-day moving average. We now closed above it, but we haven't yet closed above this. Maybe the NASDAQ has. Well, nope, the NASDAQ hasn't either. If you look at the NASDAQ, same exact thing. Bounced off the 100, bounced off of a major demand zone right here, right? But has not yet closed above this. So yes, it could be a bull trap. But in my view, here's why I don't think it is. If we take a look at the data between the election day and inauguration day, right? The last 13 elections, going even all the way back to Nixon, most of the time this period is green. There were only 2 times this period was red, and it was 2 times that we were already in a recession. The Bush inauguration in January of 2001, we were minus 6.24% on the S&P 500 between election and inauguration. And Obama's first term in January of 2009, we were minus 15%, again, already in a recession. Now, here's why I think the positive trend from election to inauguration will continue. If you take a look, even though we have recessionary markers, if you take a look at the recent data, unemployment rate 4.1% came in lower than expected. The employment change had many more jobs, added many more jobs than expected, right? So the jobs numbers are strong, which is what caused the scare last Friday in the market, because obviously a strong jobs number means a strong dollar, means that the Fed cannot actually cut rates. But then this week we were saved with good inflation data. Core PPI came in 0% unchanged month to month, and it was expected that we come in 0.2%. PPI month to month came in at 0.2 and it was expected to be 0.4. More importantly, CPI came in at 0.2 core versus 0.3, and year over year came in as expected. So good inflation data, good jobs data means that the soft landing narrative is still alive. Now, whether we get there or not, I don't know. But between now and the inauguration, what do we have? We don't even have a Fed meeting. The next Fed meeting is not until January 29th. After the inauguration. And if we take a look, this is already expected that the Fed actually holds here, right? The Fed is not going to raise, is not going to cut. There was a little bit of a scare that the Fed raises, but again, the inflation data quelled all of that, which is why we saw a rally from this extremely opportunistic demand zone in the market. So I personally think this is not a bull trap. I personally think that this is going to keep going up, and we could see the SPY at least could see all-time highs, taking out these equal highs once again between now and the end of December. Or sorry, the end of January. So what plays am I in right now and what am I looking at? Well, I told you guys last video about the NVIDIA cash secure puts. So I have some cash secure puts on NVIDIA. I have the 122 puts. These are up 23%. I sold those. I told you about the Uber play. I offloaded 10 calls. I have 5 remaining. So this one I netted almost 1,800 today. These are just covered calls against my shares. I have 5 covered calls, the 14 covered calls against my shares. All in all, a beautiful $2,500 day. Not to mention the modest $800 day that I had in my public account. So the first chart for me that I'm looking at is Uber. I'm looking at this from both a short-term and a long-term perspective. If you were already part of the traveling trader investing and trading floor, you would have already got this notice before this video. So you would already be in the calls, which are already up 40 something percent. If you want to sign up for those early alerts, click the link in the description below. I trade live every single morning with the team. So if you want to trade live with me and you want access to all of my short-term, mid-term, and long-term plays, options, futures, and stocks, click the link in the description. So in this case, we have a major zone on Uber, right? So this zone right here was January 2021 high. This was a consolidation level from January 2024, and then a consolidation support from May 2024. Then we fell below, took liquidity. This was the August 5th scare where everything fell, right? And then we broke through this level and are retesting it again as support. So this right here, this area between 63 and 64 is a very significant area for Uber. From a fundamental perspective, this drop here was because of the exuberance around robotaxi, Tesla's robotaxi being seen as a threat to Uber. But we all know that Uber is actually working on something as well, because NVIDIA during CES released the info that they are working with Uber on autonomous driving. So it's not just Tesla that is going to dominate the robotaxi space. There's going to be a variety of players, and they're all working on stuff now. So when we broke out of this level and retested it, I ended up buying those short dated calls, the February 7th ones, as well as the longer dated March 21st ones. And I also ended up buying shares. Now, my immediate target on Uber is the 100-day moving average here at around 71. Filling this fair value gap here as well. That is my immediate target. Now, my longer term target is much higher. If you look at Uber's cash flow here, right? This right here, this is their cash flow growth, went from negative to positive. And I went from negative to positive in this all. All right, sorry, rap Tourette's. But it went, their cash flow right now has been growing increasingly and significantly since it turned positive in July of 2022, and we are now at a $6 billion cash position. Also, I just typed into Publix AI, what is Uber's revenue growth and EBITDA growth the last 4 years? The revenue growth increased from 62 billion in 2019 to 115 billion in 2022, showcasing substantial growth. In Q1 2023, Uber reported a 24% growth in revenue. EBITDA, same thing. Obviously, Uber, in my view, is a monopoly in this space, and I like to invest in monopolies. Yes, there's Lyft, but from a financial perspective, it is not even close. If you look at its return on equity, if you look at its EBITDA margins, once again, if you look at its cash from operations, 6 billion versus 740 million. If you look at its EBITDA growth year over year, 197%, 3-year CAGR, 41%, 5-year CAGR, 26%. So financially, they are on the right track. And I believe they actually got some upgrades here. Yeah, so not that I really care about Zach's upgrades, but they just upgraded it to a buy. So I really like this position here for the long term and the short term. I will be all out of my calls, the short dated ones at 69 at this high. And if we get to that 100-day moving average, I'll likely be out of the March 21 calls as well and just keep the shares. Now, I talked about this last video, but I really like NVIDIA's setup here. Again, at the 100-day moving average, again, at a major demand zone. Now, one thing that I did not mention in the previous NVIDIA video that I made is this right here. One of the reasons that NVIDIA actually dropped after CES and after it reported that its Blackwell chips were scaling well is the Biden administration had this, what do they call it? AI chips control, right? Where they limit the sales of AI chips to China. So we did see a decline in the stock after that, which was basically this big red candle and these couple of red candles there. But when the market found support at that demand zone, so did Nvidia, found support at its demand zone at the 100-day moving average. But more importantly, what does this mean for Nvidia going forward? So Nvidia, they publicly came out, and they don't typically make political statements, but they publicly came out and criticized the Biden administration for these misguided AI rules and said that they can't wait for the new administration. Now, we've seen Tesla rally due to the Trump connection. We've seen Meta rally. We've seen crypto and Bitcoin rally. What do you think is going to happen if Nvidia plays its cards right and cozies up to the new administration? So that's not the only reason I like it. Obviously, I broke down Nvidia in full detail, and I think Nvidia is going to a $4 trillion valuation. My midterm target is around 163, currently trading at 135 as of the time of this recording. Like I said, I have cash secured puts as well as shares. And you guys know from the last video that I have calls as well. So looking to ride this up to back to where we are, these equal highs here at 153. So want to give this some time and see how this plays out, not only towards the inauguration, but also shortly thereafter. Tesla, just an insane pop here above this trend line. You guys know that my target for Tesla in the long term is 638. I think Tesla can easily get to that 500 level within the next few months. And we just had a confirmed breakout of not only that downtrend that started in December, that short-term downtrend, but this right here was the all-time high, right? This line right here was the all-time high. So we broke above that and broke above this downtrend here. Now, like I always tell you guys with Tesla, don't chase it, right? It's up 8% today. Don't chase it. You should be buying it when we do have weakness at major support levels. Now, for the latest rounds of calls, I personally was waiting until we got to this 360 level just because it made sense from a break and retest point of view, but we never got to that 360 level. I'm still holding the shares that I told you guys from the 150s and the 220s. But if Tesla breaks out here and retests this level at the 425 level, then I would likely get back into calls. But I don't chase calls when IV is the highest after the stock has made an 8% move. So in summary, a lot of good looking charts here. And, you know, I'm under no illusion. Like I said before, we could very well just reject this and go back down for the rest of, the first half of 2025. I personally think we'll continue to rally until the inauguration and thereafter. But I'm on record as saying that I think 2025 is likely going to be a shaky year due to the battle between the Fed, the Fed and Trump, and also what is going to happen with yields. The yields problem has not been solved. We already see oil breaking out of a multi-year downtrend, right? This is not healthy when commodity prices are rallying like this. And we are also seeing the 10-year, even though we took a little break today, but we are also seeing the 10-year rally like crazy with this inverse head and shoulders go towards that 5 level. So I don't think we're out of the danger zone yet. And I think this is going to pose some volatility risk for the market in 2025. So, you know, I'm bullish for January, but I do think that it's going to be shaky beyond that. If you want to trade live with me every day, this was our trade in the PM session yesterday, copied across 14 accounts. And yes, I sent that out in the day trade alerts and the Discord. You can pause the screen if you want and read the updates. But click the link in the description below. Not only do you get to trade live with me every single day, but you also get access to all of my swings, my long-term buys, my options, my stocks, my stock market analysis, etc. Sign up for a public account below. Let me know in the comment section, do you think that 2025 is going to be an easy year? Are you very bullish for 2025? Or are you sitting in cash? Do you think there's going to be a lot of pain? Do you see a recession coming? Would love to hear from you. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.